everyone. I guess that I've just been talking and I've been muted the whole time, so I apologize for that. So welcome everyone to tonight's webinar. I am Angelica Coughlin, and we're going to be talking about different alternative lending solutions to buy your businesses. We do have a special guest today. I'm hoping that, Cindy, can you hear me?
I can hear you. Can you hear me?
All right. Yes, I can. That is fabulous. Okay, great. So I have Cindy Klein from Bibby Financial here with me. For those of you that were on the webinar 2 weeks ago, I actually talked about bringing Cindy on the call. We're going to have Cindy talk a little bit first, and then we're going to go ahead and open up the phone lines for questions. So I want this is your session as always. As always, we are recording this webinar. It should be up on the website within the next 48 hours. And I'm basically going to go ahead and start by talking about the free business valuation tool. This is something that I've been showing on every webinar so that all of you have this available for you. This is an online valuation tool that you can use. You can plug in some financial information, and then as you're looking at businesses, you can actually then plug in some information and see if the price that they're asking for the business is within reason. As we've said on other webinars, business owners have a tendency to, they don't do this on purpose, but they come up with a value for their business and they kind of pick it up out of the sky. They're looking at what they want to get for retirement. So a lot of times they don't equate, how to actually value their business correctly to get a true value. They'll sit there and just think about, well, this is the work I put into it, this is what I need to get out of it, and then they pick a number. So this is a great guide for you when you're looking for businesses that you're interested in as part of your due diligence to go ahead and use this online. It's a free valuation tool, and if you enter in specific information that you can get off of the business listings, it's very helpful. All right, so Cindy Klein, Cindy, I have your picture up here on the screen, is with Bibby Financial. I'm going to go ahead. I've known Cindy now for about 6 months, and she's a very helpful person. She is somebody that's really, very willing to work with people. She's here to educate us on the types of different alternative lending solutions that Bibby provides, and she's also going to talk to us about how to actually prepare for that. So, we're going to let Cindy talk, and then I'll ask her some questions, and then we'll go ahead and open it up for questions. Thanks, Cindy, for being a part of this today.
Oh, absolutely. Thanks, Angelica. So, Angelica's correct. I work for a company called Bibby Financial USA. We are a 210-year-old company, and here in the U.S. for about 25 years. I specialize in helping small and mid-sized businesses from startups to turnaround, companies that may have hit a bump in the road, but basically they're not bankable, and I'm talking about bankable from the credit facility side. I am a former business banker, commercial lender, about 20 years in the banking industry. Left it a year ago to come over to this side of financing so that I'm able, as Angelica pointed out, to help more people, more small and mid-sized businesses with their borrowing needs. Invoice financing, aka factoring, is a product, a service that has been around for a good number of years. It's used extensively in Europe, which is the UK is home to Bibby, and so it's very well known, utilized by all different industries, and what all of these industries have in common are the following things. They are business to business, and when they provide their product or their service to the business they are selling to, they are issuing an invoice, and that invoice is going to be paid on terms. It could be 15 days, 30 days, all the way up to 90 days, or even up to 120 days. It depends on the companies that you're doing business with. Once that invoice has been issued, the clock's ticking. You've provided a product or service, but you haven't been paid for it yet. So to help your business be able to keep the lights on, make the payroll, make more widgets, provide more services, we can advance up to 90% of that invoice you just issued within 24 hours. We're going to advance it into your operating account, and then we're going to take over collecting those monies from your customer. We're going to collect that invoice for you. So you don't have to worry anymore about people paying late, about people not paying on time, whatever. We're going to take care of that for you. We have professionals in each and every time zone here in the U.S. that can help your company collect those invoices that we've already advanced you up to 90% again. Once that money comes in, once the invoice is paid, then we take our fees out of the other 10, 15, or 20% that we were waiting on coming in, and we advance them the rest of the money into your account. Invoice financing works, and it works well because it does speed up your cash flow and makes it possible for you to move on to the next project or the next, provide the next service.
Thanks. Now, Cindy, can you also, a lot of the people here, they're looking at businesses, they're actually looking to buy businesses. Can you talk a little bit about what is the type of information that you require to actually determine if you're going to be working with somebody? I mean, what kinds of things do people need to prepare for, and what do you need to actually work with them?
So first of all, our facility sizes range from $50,000 all the way up to $10 million. So you can see we've got a wide range there. I'm going to start with talking to you a little bit about what does your business do. We're not talking about how long have you been in business, because we don't have any problem lending to brand new businesses, but we just want to make sure that you qualify because you are issuing invoices and being paid over time. So that's first requirement, that you've got contracts with your customers and that you're issuing that invoice. Then the next thing we want to take a look at is we want to take a look at your customer list. Who are you doing business with? Because we're not actually looking so much to your personal credit. So if you've got challenging issues on your personal credit side, we're really looking to who you're doing business with. That's how I'm going to underwrite this credit facility. So we'll want to take a look at your AR aging. We're going to want to take a look at the accounts payable accounts payable ledger, and we're going to want to take a look at your customer list. We're not calling your customers. We just want to take a look at that list of customers so that we can pull something called D&B, Dun & Bradstreet, on them. If you have historical financials, we're going to want to take a look at those. And obviously, if you're buying a business, and it's an established business, so whatever financials you're looking at, it's good information for us to have that. It's okay if the business isn't profitable. It's okay if it doesn't have return earnings. It's just that if you have financial statements, we're going to want to take a look at it. The other thing that a factoring company, an invoice financing company such as Bivy is going to do is we're going to actually look at projections. Banks won't look at projections. When I was a banker, I never looked at projections. You could provide them to me, but they weren't of any use to me. So we'll take a look at projections, the customer list, AR aging, AP, and then we have a one-page application that we want you to fill out. I don't think I missed anything. I think that's all that we would ask you for. Go ahead.
So when people come to you, so they should have the financials ready, they should have the customer list ready, they should make sure that the customer is within the size that you just talked about, so up to 10 million. And when you say up to 10 million, what do you mean in terms of revenue? Do you mean in terms of, how do you determine, what do you look at when you're looking at size of company?
Oh, we're not looking at the size of the company at all. We're actually looking, that's actually my facility sizes. That's the amounts of money that I can lend. So we'll lend a credit facility. No, you're good. We'll establish a facility size as low as $50,000 and as much as $10 million. Typically, the bigger loans we see going out to companies that are in super growth mode and they're growing too fast for their banks, or we're looking at turnaround situations or mergers and acquisitions like what we're talking about tonight.
Okay. And then what is, in terms of how quickly can you get, like once they fill out, is there an application process? What's the process for them to actually have you start evaluating if you're going to lend them money? And then how long is the turnaround and when can they get their money?
Oh, sure. We can move as fast as you can give us the information we're looking for. So once you've completed an application and provided us, with things like articles of incorporation, a copy of your driver's license, just a few little things. My list is not very long. I would say we're typically 10 items or less. Once you provided me with that information, we're going to, we'll also want to take a look at the invoice trail. So that means we're going to look at invoices, and we're going to want to look at the contracts and your AR aging. Once we've seen all of that, we'll be able to put together a proposal for you, and the proposal will explain our terms, the rates, and what the due diligence fee would be for that loan. We walk through that, what that looks like, what it would cost you a month to factor with us, what it would cost if your customers aren't paying for 90 days. We talk about all of that. It's very transparent. If you like what you see, you sign your term sheet, you send it back to us with the complete invoice trail. So all of your invoices that you have currently would need to be uploaded to us. And then at that point, my underwriting team runs their searches, does their background screening, and then they are, then we'll be able to send over the final documentation, and that will include our legals and our final terms. And after that, after you've had an opportunity to review that, you sign it and send it back, we can fund as quickly as 24 to 48 hours. So that entire process that I just described, I've done it as quickly as 2 weeks, and for larger, turnaround situations or more sophisticated companies, it could take 4 to 6 weeks.
Okay. And then, so this is now, that's one type of lending that you do. Can you also talk about some of the other types of lending that Bibby does as well?
Sure, absolutely. So we always start with invoice financing, factoring. Again, it has to be a company that's issuing invoices to their company, to their companies they do business with. So we also do something called asset-based lending, or you might hear bankers and other alternative lenders calling it ABL. Asset-based lending, we're going to take a look at first what your invoices, your AR looks like, but then we're also able to lend against all the assets in your company, your equipment, your machinery, your inventory, and your real estate. So for a company that's maybe reorganizing or, again, hit a bump in the road, we can take a look at all the assets of the company, starting with the AR, and lend against all of that so that you'll have a term loan against the assets in your company, and Bibby would be factoring your invoices, your AR.
Okay, great. Now, I know that Bibby's an international company. Where do companies need to be located? Are there any companies that Bibby does not, like any countries that they don't do lending?
Sure. There's a list that all lenders nationally have to abide by. It's called the OFAC list, and the OFAC list is provided to lenders by the federal government, and these are just countries that we are not allowed to do business in. You might remember that Cuba was on it forever. You can imagine other countries that are on that. The UK, because we are, at the heart of all this, we are a UK-based company. Their OFAC list actually mirrors the US's OFAC list perfectly. So anyone that we have, we're having disagreements with and can't do business with, we'll let you know right away up front. Typically, most businesses know who those countries are. If just watch the nightly news and you can usually tell. But we would let you know right away. We're all over Europe. We have offices in Asia, definitely Canada, United States. I would say, bring it to us. Let us take a look at it, and we'll let you know if we would be able to help you with that.
Okay, great. So, Cindy, I'm going to ask the attendees now. If anybody has any questions, raise your hand, and I'm going to unmute you. You can ask your question directly to Cindy, and then she'll give you an answer. So let me see if anybody has any questions. Raise your hand if you have a question, and I'll go ahead and unmute you. Okay, so I'm going to unmute Diane. Diane, I've just unmuted yours. Can you hear me? Let me see if I can.
Okay.
Yeah, I can hear you. Go ahead.
Perfect. So,
hi, Diane.
Hi, Cynthia. Thank you for the wonderful information. We had a quick question actually about asset-based lending on assets that are in ground. Is that something that you do?
I'm going to say no. So you're talking mining, oil, that in
Yes,
ground
mining and oil,
coal.
exactly.
Yes, but what I would say is that there are specialty lenders that would look at that, and so, you know, Angelica can give you my email address. I can see who, because I mean, we've got 100 years of experience in lending here in the Midwest market. We're a national company as well, so between us, we probably know somebody. We definitely know somebody who would do that kind of lending. Bibby itself does not do that kind of lending.
Okay,
And the
excellent.
office, I'm sorry, go ahead.
No, I was just saying thank you so much. That was all. Go ahead.
Okay.
And I think the office has actually told me that they're putting Bibby's and Cynthia's contact information on the website, so you should be able to find that. And also, Patrick has her information, so if anybody needs her information, you can also contact Patrick. All right. So Diane, anything else? Anything else you'd like to ask?
Not for Cynthia. Thank you, Cynthia.
You're welcome.
Okay. All right. I think Olivia, you were Olivio. Okay. Olivio, I'm unmuting you. Are you there, Olivio? Hello? I guess we don't have Olivia. We'll try him again later. Ricardo, do you have a question? I'm unmuting you.
Hello. I'm wondering.
Hi, Ricardo.
I'm wondering if for prospective businesses, you would also do, for instance, any gas stations or the like, and basically based on receivables of credit card receipts would be your invoices. Can you loan based on those?
No, that's another industry that we don't do. Typically, we're in oil and gas, staffing, distribution, IT, tech. So some of the industries that we aren't able to help just because of the way that we're set up would be medical, construction, and you know, gas stations. Those types of industries we're not able to help you with. There are companies out there that can do financing. I want to say that the Small Business Administration, SBA, can help you with that. And if you're just buying gas stations, I would say look to an alternative lender that's offering a product called non-bank, N-O-N, bank SBA lenders, because they're able to do things that banks wouldn't be able to do for you. But it's still the government guaranteed loan known as SBA. I hope that helps.
Thank you.
You're welcome.
Okay, anything else, Ricardo? Do you have another question, Ricardo?
No, I'm good for now.
Okay, very good. I'm gonna try Olivio again. Olivio, I've now unmuted you. Can you hear me? I guess we don't have Olivia. Ricardo, I see your hand is up again. Ricardo, did you have another question? I see your hand is up.
Oh, I never moved my hand, but you unmuted me, so I figure I move it now.
Okay, all right. I'll go ahead. All right. Anybody else have questions? Anybody else? I mean, this is your opportunity to get any questions answered. If there's something specific on a business that you're looking at or a deal that you're trying to put together, now's the time to ask the questions. Anybody else have a question? I mean, these sessions are yours. We want to open these up to help you. Okay, Diane, I see you again. Okay, Diane, I've unmuted you.
Sorry, my husband and partner. Thank you so much. Sorry again, my husband just brought to my attention we're also pursuing a real estate hotel restaurant, like multi-restaurant deal in Washington State. And do you lend against the real estate, or how would you lend against a restaurant? Like how would that, and hotel combo, how would that even work?
Yeah, those are industries that we don't lend against. So we're lending to companies that provide, it's business to business. So start with that. So if you had a caterer that was catering to a business, then we would be able to help with the invoice financing and all of the assets of the company. But any kind of a retail or, you know, the food industry, those don't fit the business model, sorry. There's lots of good alternative lenders out there that can help you with that.
Perfect.
Probably
so if let's say I have
SBA.
a catering company on site that does the catering for the hotel,
Mm-hmm.
They're two separate companies, like listed as two separate companies, and they do weddings, like $20,000, $30,000, $40,000 weddings. Is that something you could then lend against the caterers' invoices? Is that correct?
Would you be billing for that? Who are you going to be billing for the wedding? Do you bill the hotel,
because they have separate entities, you actually be billing the hotel. You bill the hotel is paid already ahead of time by the people having the weddings. I know it sounds complicated, but that's just kind of how it works here. So you could actually.
Yeah, so with invoice financing, or AKA factoring, we're always dealing with companies that provide a service or a product, and then they bill for it. They don't get paid right away. So if you're being paid by credit card when the service is rendered, or check or cash, then that's not going to be factorable. If you're issuing an invoice and it's going to take 30 to 60 days before you get paid, it's business to business, then so the catering company to the hotel, if there's an invoice, if there's a contract and an invoice between the two of you, we could then advance up to 90% of that invoice right into your operating account. We'd collect the AR and then put the rest of the money in your account after we take out the fees. Does that help?
Okay, that does. That's perfect. Thank you.
So Diane, and correct me if I'm wrong, Cynthia. I mean, if they were doing corporate events at the hotel and that there were businesses that they were invoicing, would that be something?
Yes.
Okay.
Absolutely.
So
business,
Diane,
business,
you see the difference, because that's a business to business versus where you're doing weddings. It's business to consumer.
It's B2C. Yep.
Okay.
I totally understand. Excellent. I just thought I would double check, since they're two separate companies and under one building. They're trying to sell both companies at the same time. I figured I'd check.
Yeah, no, I hear you. And it was a good question. So every time that I say it, for specific situations, it helps everybody else to understand it better too. It's a very specific lending service that's being provided.
Excellent.
Anything else, Diane?
Thank you
so
so
much.
much.
Good, or do you have another question? Do you have another question?
I don't think so for Cynthia, but one might pop up in a minute. You never know.
Okay. All right. Well, raise your hand if you have it. That's good. All right. Great. All right. I'm going to try Olivia again. Olivia, I see you were raising your hand. I've unmuted. Wait. Oops. It got muted again. All right, Olivia, I've unmuted you. You need to talk. I saw you raise your hand, and then I see the question mark here. So for some reason, we're not able to hear. Now, I don't know if, let me see here. I see there is it says, what determines the 10, 15, 20 percentages of fees you charge? So I guess it would be a good thing, Cynthia, if you could tell us a little bit about the types of fees, and if you could talk a little bit about that.
Sure. And there's some confusion there, because what I was talking about with the 10, 15, or 20% was advance rates. So when you provide your AR to us, we would look at it and decide if we're going to be able to advance 75 or 90% of each invoice into your operating account. So that's an advance rate. My typical advance rate, if it was a $100,000 invoice, I would be advancing 85% as soon as you deliver the product or the service. So I would move, as soon as you give me that invoice, I'd move $85,000 into your operating account within 24 hours. So hopefully I cleared that up. Now, how do we determine the fees associated with this product, or what rate are you going to be charged? That's determined on a case-by-case basis. So we're not looking to your credit score to determine what interest rate you're going to be charged. We're actually looking at the companies you're doing business with. So if you're doing business with Walmart, and we know that Walmart doesn't pay for 60 days, but we know that Walmart always pays, that's going to be a very highly rated accounts receivable, AR. So the rate that would be charged for that would be lower. A company that maybe doesn't have a good paying history and has had some issues of their own in the history, we can see all of that. And so that might actually cause your invoice financing credit facility to be more expensive. So all of our pricing is risk-based. It's going to be based on who you're doing business with. And a little bonus to doing business with Bivy is, as you are taking on new customers. I'm going to give you an example. I have a gentleman who's importing sauces from Italy. And one of the companies that he was bringing product in from actually had a very bad credit rating. When it's I don't want to muddy the water too much, but actually when it's an international invoice, we have credit insurance on that. So we ran this company past our credit insurance company, and they said no, that this company is on the brink of bankruptcy, that they would not insure it, and so Bibby had to exclude that invoice. So on a domestic level, when you are doing business with us and you decide that you're going to bring on a new customer, you're going to provide them your product, you're going to provide them your service, your account executive in your time zone is going to take a look at who that customer is, what the contract looks like, and they can advise you whether or not Bibby is going to be able and willing to lend against that AR. Basically, if we tell you no, we're not willing to lend against that AR, that means that you probably shouldn't be doing business with that company because they don't pay their bills on time. So I hope that long-winded explanation helped you. Interest rate is going to be based on the quality of the customers you do business with. We risk rate everything. We're very transparent about it. You're going to know, exactly what that credit facility is going to cost you monthly, and then you can base decisions on what you're going to be charging your clients based on how much it's going to cost you to get your money faster. So I think it's a win-win. Another really good example is a client of mine I've been helping get his facility set up. He did qualify for a line of credit from the bank. Unfortunately, that credit line is maxed, and so he's not able to advance anymore. And quite frankly, they're probably not going to renew him. So, he's taken a term loan to get himself out of that line of credit, and we're going to do invoice financing going forward. And he said, had he known about factoring when he bought this business 2 years ago, he would have gone straight to factoring and never taken a line of credit from the bank. Because with this, it's paid off. As soon as those invoices are paid, you don't have a revolving line of credit. You have cash flow that's moving very, very quickly.